Hello, and welcome to another installment of Paul's Thoughts About Everything. I'm Paul Carman, and I'm an advisor with LPL Financial based in Boca Raton and Palm Beach, Florida. While my offices are in Florida, I'm licensed in and work with clients in other states as well. I welcome any questions or comments you may have and encourage you to email me at paul.carman@lpl.com. That's paul.carman, C-A-R-M-A-N, at lpl.com. Today, I would like to talk about financial market terms you've probably heard many times, but may not know what they represent. This segment is not meant to be an all-encompassing compendium, but only a synopsis of some of the more prevalent terms. The first is the New York Stock Exchange. Founded in 1792, it's the oldest and most dominant stock exchange in the U.S. and allows investors to buy and sell shares in thousands of publicly traded companies. It is also the world's largest exchange by market capitalization and is located on Wall Street in New York City. Next, the NASDAQ, or the National Association of Securities Dealers Automated Quotations, is the world's first electronic stock exchange. Founded in 1971 and based in New York City, it operates utilizing a computerized system for trading and is the second largest stock exchange in the world by market capitalization. It is heavily weighted toward technology, biotechnology, and growth-oriented companies. The NASDAQ Composite is a market capitalization weighted index of almost all of the 2,500 or so stocks listed on the exchange. Next, we have the Dow Jones Industrial Average. The Dow Jones Industrial Average, or the Dow as it's more commonly known, is a stock market index that tracks 30 major public companies listed on the New York Stock Exchange and the NASDAQ. It acts as a quick temperature check and key indicator of the U.S. economy and is one of the oldest and most widely followed indices. Investors and analysts use the Dow to gauge market trends and economic confidence. Changes in the index's competition reflect shifts in the economy and the evolution of leading industries and corporations. While the Dow follows a broad range of companies, all can be described as blue chip with consistently stable earnings. The S&P 500 is another market capitalization weighted index of 500 leading publicly traded companies in the U.S. It actually consists of 503 companies because 3 companies have 2 share classes. The Russell 2000 measures the performance of about 2,000 of the smallest publicly traded companies in the U.S. It is annually updated to omit companies that have grown and no longer fit the profile. The MSCI EAFE Index is the Morgan Stanley Capital International Index consisting of Europe, Australia, Asia, and the Far East. It is an international equity index of large and mid-cap companies across 21 developed market countries around the world. The MSCI Emerging Market Index measures the performance of companies in fast-growing countries around the world. The MSCI KLKD 400 Social Index is a capitalization-weighted index of 400 U.S. securities that provides exposure to companies with outstanding environmental, social, and governance (ESG) ratings and exclude companies whose products have negative social or environmental impact. You heard me mention ESG in the last definition, but what exactly is it? ESG, or Environmental Social Governance, is a way to measure environmental, social, and corporate governance, i.e. socially conscious investing, and excludes companies who have a negative social or environmental impact, such as cigarettes or oil companies. The Bloomberg U.S. Aggregate Bond Index, also called the AGG, is a broad-based market capitalization-weighted bond market index, representing immediate-term investment-grade bonds traded in the U.S. bond markets. Lastly, for this segment, I want to mention 2 types of investment that most people have probably heard but may not know the definition of. They are tactical investments and strategic investments. Simply put, tactical investments are short-term investments, usually 3 to 12 months, and involve more trades, while strategic investments are longer-term investments, typically with a 3 to 5 year duration. I hope you found that interesting, And again, if you have any questions or comments, please reach out to me at paul.carman@lpl.com. That's paul.carman, CARMAN, @lpl.com. Thanks for listening.